Welcome back to the live room. Welcome back to the Bridging the Gap workshop. Hopefully, you guys had a fantastic weekend. Hopefully, you guys are staying cool if you're dealing with a heat wave out there like we are. But good to be back. Good to be here for another session. Hope you guys enjoyed the training yesterday. As always, if you didn't have a chance to check it out, you can go back and do that. It's all recorded. It is all there for you to review as long as this workshop is going on. But two brilliant sessions yesterday on maybe not the sexiest stuff when it comes to trading, but the stuff that no one is going to tell you, the stuff that you need to hear if you want to be consistently profitable and really if you want to get on the correct path in doing so. You know, as Charles pointed out, there are two different paths you can take. There is the path of wrongness, right? Which is typically what we all start off on because we have these false expectations and we want this and we want that. And then either one of two things happen. Either we kind of go broke before we have a chance to correct things, or we eventually get on the correct path and we start changing our future. James said money management is so sexy. It really is the key. We've been going over strategy development in the Monday Q&A sessions for the last few weeks. I was showing the traders yesterday. We did a session about portfolio building and how the most, and this is going to seem odd to some of you guys, but how the most profitable pair may not be the best pair to use when thinking about developing a portfolio. You have to take the full thing into account. And one thing you have to take into account is the drawdown, right? So here's the thing, right? You know, let's say you have this pair that does fantastic. It is by far your best performing pair. It produces a massive return on investment for the year, right? That seems great. Everyone wants to use it. However, if it takes a massive drawdown throughout the year in order to get to that return, is it worth it? And this is a lesson I learned when I was managing money. When I managed money, and imagine this is old school, right? I'm selling myself, I'm selling my system, I'm selling my performance. And my mindset was like, okay, I'm gonna wow these wealthy individuals by just showing them these awesome returns. I'm gonna show them these awesome returns. Here's what I can produce for you, right? Who doesn't like making as much money as possible? And the lessons that I learned during that trial and error process was that it wasn't just about the return. It was about how do you get the return. And, it kind of reiterated one of the most important lessons in my trading career, which was the number one rule of trading is don't go broke, right? The number one rule of trading is conservation of capital. And it was more important to these individuals that I have a slow, steady, consistent return on investment versus a bigger one that's a little bit choppy. And when you start learning about money management and when you start playing around with the spreadsheet and you start putting in the numbers and seeing all the magic you can do with position sizing, which is some really, really fun stuff, you'll realize that the magic in a money management strategy comes from having a slow, consistent return. Because when you have a slow, consistent return, you don't have to worry about taking steps back, right? You can just slowly churn out money, slowly increase position size, churn out some more money, increase position size, right? And let the system work the way it's supposed to work. When you have a choppier equity curve, when it's going up and down, now you're increasing position size, but then that massive drawdown causes you to decrease position size. And now your wins have to work 2 times as hard to get out of the hole you dug yourself in. And by the time you dug out of that hole, you're not really increasing position size again. Or I guess you are, but you're going back to your original position size. And you don't really get to take advantage of it. So it's an interesting concept because it goes kind of against common sense. And this is the cool thing about the trading journey. You learn so much stuff, but we go in thinking one thing and we come out learning another. So hopefully these 2 training lessons yesterday give you the heads up about that. You don't have to waste as much time kind of with the wrong idea. you have a good idea of what it looks like, what it takes, what it requires. And then once you get to that point, the cool magic you can do with it. So yeah, I really enjoyed the session as well. So let's hop into things today. We're going to take a look at the economic calendar. We got an interesting time in the market. How many of you guys looked around the market today already? How many of you guys did some pre-market assist, maybe some trading in the London session, perhaps, right? What was your take on the market today so far? Was it super exciting? Very active? A roller coaster ride? This market was quite flat. Yeah, I agree. I looked at the market this morning and pretty flat. And it's really no surprise. Again, here in it, we're always I used to always say we're in an interesting time. I feel like we're always in an interesting time, but we are in an interesting time now because we have two going on, right? So we are in unprecedented economic times right now. I think we would all agree. We had this conversation last week just about kind of we're at a point like this where we're like inflation, recession, maybe recession, not really recession, but kind of recession, technical recession, but not really recession. Like we don't really know where we're at, and this stems over from the whole COVID thing and bigger picture. We're at a massive shift in society with a lot of things, and kind of open the door to this massive progression. But that's another day. It forced us into changes which probably would have taken a longer time than they did. But we got that. We're at this delicate time where we're in the middle of kind of the peak of aggressively hiking interest rates to going in the opposite direction. So if you think of interest rates being like a mountain, and one side of it up, that's us hiking it. Eventually, we're going to get to the peak, and then we're going to start decreasing it again. That's how it goes. You hike and then you reduce. You hike and then you reduce. And we're kind of at that point where we're trying to figure out, are we at the peak? When are we going to start going in the opposite direction? So the market is paying a massive amount of attention to fundamental news coming out, specifically inflation-related news. And it's been kind of stop and go traffic from news event to news event. Now, you add that to the point that it's the summer. It's the dog days of summer. Summers are typically slower to begin with. So you're seeing this combination of very slow summer movement and then boom, big explosive movement coming out when these news events come. And you can look on your economic calendar today. We don't really have much in front of us, but what the market is waiting for is tomorrow. Tomorrow we've got CPI coming out, key inflation data point. We've been rising. The market is looking to see the expectation is a lower number overall. And the market's going to make its future prediction based off of what this number says. So we're at a point right now where everybody wants to keep their hands dry, right? Everyone wants to stand back until we see what's going on. And again, despite this being a dollar figure, this has a trickle down across the entire market, right? And we get that all the time with, well, how come news events come out or a news release comes out for one currency, let's say the dollar, and then I see like the Aussie yen going crazy? Well, they are all related, and the dollar happens to be kind of the main currency, the centerpiece of everything else. So you see this trickle down effect when you see dollar news, right? This kind of goes to the basics of investment as well. Investing and trading, right? If someone has their money in a dollar and let's say negative news comes out for the dollar, do you think traders just take their money out and put it under their mattress? And if you're watching on YouTube for this first part, I apologize if the audio was cutting out. I got a simple solution for you. Head over Bridging the Gap workshop. Stop watching on YouTube. You got a free 2-week workshop. There's only 1 week left. Get over here in the live room, get some better audio, hang out for the entire session, and get some free training and software while you're at it. Simple solution. But do you think traders just take their money out and put it under their mattress if they're removing their money from somewhere? No, they shift it else. They take it from one investment, put it in a different investment. So that's why you see this trickle down effect of, oh, we're going to sell dollar, let's go buy some yen, or we're going to sell yen, let's go buy some, or something like that. So it does have effect across the board. So if you're wondering why you're seeing slow markets, that is the reason why. The key in these slow market times is simple. Don't do anything dumb. Don't do anything dumb. Keep your powder dry. Don't waste money. Wait for your opportunities. So we're going to do our best to look at some opportunities today. Of course, this is a special week or a special 2-week. We're doing more training as well. So if you guys have got anything that you've gone over in training so far, and you want to see some examples, feel free to let me know. And we're going to start with the pound yen real quick, though, before Darren yells at me. We got a pattern setting up here as well. This is on my radar for pound dollar. We saw we had one right before last week, too. X to A to B, B to C, C to D for a potential bearish bat. So if price action comes up to 121.50s, we got a potential bat pattern this last week. They're going to look sloppy and choppy. You're going to see a lot of consolidation during times of consolidation, depending on what type of trader you are. For some traders, it means nothing's on the radar. Just make it a golf day. For other traders, like if you trade advanced pattern formations, they typically form within periods of consolidation. These quote unquote choppy periods can be gold. So, I think it was pound yen. It was that I want to go about. Yeah, let's go to pound yen. We're going to start on the daily chart. We got a few things setting up here on pound yen. And of course, this is going to be a follow-up because we look at the same pairs all the time. So everything kind of builds on the analysis. So if you're here on a regular basis, you know exactly what this is. But here on the pound yen, real quick, Jason put on some weird music this morning with screeches and just had bad frequency. Probably his wake-up alarm. That was probably Greystone's wake-up alarm, the most annoying noise in the world to wake you up. Me, I just have young kids, so I don't need any alarm. I've got young kids that wake me up 2:45 in the morning and kick me out of my own bed. So for you guys wondering why I was on the chat this morning at like super early, that's why. I'm supposed to be the man of the house, but I don't even have a bed. Yep. It was funny, Darren. I just, I fought it like it was like 2:45. He woke up like 3 times and nightmare, scary, right? And it's like 2:45. And I wanted to wake up early because I've been doing some back testing on some strategy development stuff. And I ended last night on a good note. So I was excited to do the next pair. The pair I did this morning was horrible. Horrible. Waste of time. I was so disappointed. But last night I was like, yeah, this pair was super profitable. I'm going to do another one. It's going to kill it. I can't wait to build this portfolio. So I'm up staring at my ceiling like 2:45 in the morning, like thinking of different filters. What if I make it a 6 period instead of a 7 period? But then I'm like, no, Akil, you should sleep. You should sleep because you're going to pay the price. Because I dumb Akil does it all the time. There's like 5 o'clock is my limit, right? If I'm good after 5, anything before 5, I pay the ultimate price. So finally, this like a dog, this kid comes into my bed and like nuzzles up at the end of it, and I'm a good 6 feet, so I can't stretch out all the way. And he keeps rolling up and up. So I'm sitting like in this curled up fetal position, trying not to kick him in the face. And I just say, man, whatever. I'm waking up. I'm gonna do some testing. I'm gonna bang out another year on the pound dollar, get some good results, build this portfolio, get one step closer to completing this strategy. And then I do the testing, and it's horrible. 8 years of testing for break even, Darren. now I'm tired. Now I'm tired. I got no good trading results to show for it. Complete waste of time. That's the process, though. And if anyone's ever done back testing, that is the process. It is a lot of pain. It's like any other scientist or anything like that. It's a lot of pain. It's mostly failure. It is 99% failure. It is 1% success, but all it takes is that 1% success, and it can change your life forever. And then you go back to 99% failure. So that is the process. But anyway, Here on the pound yen, we're talking about coming across this range again. You can see we held at the bottom again, just like we did the last two times, right? We came down, found buying pressure, right? Big wick to the downside, found buying pressure, came right back to the midpoint, which is what we expected. If you guys remember, we didn't expect a full cross. We had no reason to predict a continued move higher, but we did thought we would see this a retest of this midsection right here, right above the 163 even handle. So let's take a quick look down to the 4-hour chart, and you can see some interesting things happen. So again, you can see our previous level of structure, which we hit right here. Who remembers what we call this type of level zone, where we hit on both the top end and the bottom end? Cody's liking shorts. Ice zone, structure swap. Enrico says it's always that one pair that can make you go back to the drawing board during back testing. Yeah, well, I wouldn't say one pair. I don't get bothered over one pair. I don't think you should go back to the drawing board after one pair. And that brings up a good point. If for you guys, because we're on the topic of back testing, we spoke about it in the training a little bit. Understand that when you're back testing something, it's not going to work on every pair. You guys get that? I know I'm all over the place today, but it's not going to work on every pair. And one of the biggest issues I see, I will see people test like 10 pairs. I'm not even lying. It's ridiculous. I will see people test like 10 pairs. They'll have 9 pairs that work fine. You know, some good, some break even. Then they'll have one pair that is like a negative pair. And what do you think they do? They ditch the strategy. Why? Don't ditch the strategy. Just ditch the pair. It is very similar like this, right? We make these comparisons to trading because trading is a business, but we make a comparison to like a brick and mortar business because it is very similar. Think about it like this. I'm trying to think of a restaurant. We have this restaurant or this fast food place. Let's just say McDonald's. So McDonald's is known for their hamburgers, right? So they're selling good hamburgers. Boom. They start introducing stuff like chicken sandwiches. Chicken sandwiches are selling good. They start introducing salads. Salads are selling good, right? They keep adding these things. Everything's selling good. Then let's say they start selling a fish sandwich. I don't know if I haven't been to McDonald's in ages, right? But I don't know if they sell a fish sandwich. Let's say McDonald's starts selling a fish sandwich. And that fish sandwich is horrible. No one buys it. It stinks. Not profitable. Should McDonald's just shut down? Should they just close the entire McDonald's? Say, well, it was a good run. Good while it lasted. No, just ditch the fish sandwich, right? So when we put it into perspective like that, it makes perfect sense. And people are like, oh yeah, that makes perfect sense. Like any other business, what you should be doing in a business is you should be running an audit. We did this with our real estate business years ago, where we took 2 years too late because we were emotionally invested in the property, but we had a property that was just bad. We had one property that was just bad. And it was our first property, so we were emotionally invested, and we shouldn't have been. But that's new business owners. That's what happens. We're human, right? And every other property is profitable except for this one property. So what do? Close down the whole company? No. And we'll go over Cody's setup in a little bit because I'm actually looking. Well, I'm with Cody, but expecting something else. But we'll talk about that in a little bit. Well, I shouldn't say expecting. I'm with Cody, but for me, the opportunity is somewhere else if something were to happen. But yeah, we scrap it. You sell the property, get what you can off of it, invest it in something else. So back testing the same way, right? You're just trying to build a solid portfolio. It's not gonna work the same on all 28 pairs. You're probably not looking to trade 28 pairs in the first place. Like my trading portfolio is a solid 9. A solid 9. And not to get too much into it, but you realize that the more pairs you trade, the smaller your position size has to be per trade. And then the question is, well, do I want to trade a smaller position size on trading opportunities that are or would I rather trade a larger position size on my best trading opportunities? Like I would rather have a small circle of my best employees. Like if you're talking about your pairs being like your employees, I'd much rather have a small circle of my best employees than a massive business where some employees are good, but others are kind of joking around and doing dumb stuff because I can't really pay attention to them. But that's a topic that we can talk about more and more and more, and you'll hear a lot from me with back testing. But it's you got to realize that perfection, there's no such thing as perfection. Everything isn't going to work on every single pair the same way. Each pair has its own personality. You need to take that into account. What you're doing is you're looking to really collect the ones that work the best for you. And remember what I said earlier, the best doesn't just mean return on investment total. It means the journey that it took to get there. But this is an ice zone structure swap. Well done. Previous level of structure resistance. We're banging up into it. We have an interesting story that price is telling us, right? We came up here and then we retraced, right? With our retracement, did we put in a higher low or a lower low? Higher low or a lower low? We put in a lower low, then we came up again, right? Retested the same highs, got rejected again. Next retracement. Did we put in a higher low or a lower low? Lower low. So thus far, we have a series of the bulls being able to push it up to equal highs for the third time now. The bears not really being able to push it down so much. So this isn't a trading opportunity now for me, right? Because we need to violate this level. But if we can take out these highs, and this is the big if, right? There's a big difference between saying, hey, we're going to trade it right now because of this. No, right now it's a sell. The only signal I would see would be a sell right now. And I'll dig into Cody's explanation later, right? Because I think it is cool to get different perspectives on the market. As I told you yesterday, I'm not always right. Right? I see the market the way that I see it from my trading perspective, meaning opportunities that I can take advantage of. If there's not an opportunity I can take advantage of, I can see it and explain it to you, the coaching side of me. But if you put me in a strictly as a trader capacity, I just don't care. I only focus on things that I can do, because if I'm not allowed to do it, why waste energy on it? But if we violate this level to the upside, if the bulls finally break past this level, if the sellers give up after being defeated higher and higher and higher, we should see a breakout to our next level of structure right here, right? We spoke about elephant candles the other day, right? You guys see an elephant candle? You guys see any big red candles that stand out amongst the rest? Give me a yay or nay. Yeah, right? We got one right here, which is proven to be resistance right now. Another right here, same level. Our next one's going to be right here. So we'll put a note on that. We'll talk about it later. But so let's take a look at it right now, because this is a different type of trade as well. So right now, for a counter trend trader, price is holding at a previous level of resistance. We're going to look at potential shorts now. And Cody says the 164 even handle, right? Psychological levels, psychological numbers that end in 0, 0. What is another psychological number, guys? 0 zeros. What's a smaller one? Give me an example. I'm going to keep testing you guys, making sure you're paying attention. Yep, 5 zeros. Then you can go quarters and halves if you want after that, or quarters. The 164 even handle is acting like a nice resistance zone. Again, reading Cody's comment. We are testing it again on the 1 hour with a lower low, lower close off a triple top. Would like to see a nice break of the trend line being created, sloping up. So what Cody's looking at is this, and we'll go down to the hourly. But so the series of higher lows that we spoke about, He's looking at this as being a trend line level of support, right? We know that support and resistance can come in different ways, and this is going to be off of your personal preference. Some people love trend lines. Some people hate them. Some people love horizontal and horizontal support and resistance. Some people hate them. Are people that love trend lines wrong? Are people that love horizontal support and resistance levels wrong? Which of those groups are wrong, guys? What's the right way? What is the right way to draw support and resistance? Yeah, they're both right. No, not my way. No. Have you heard nothing? Yeah, my way is always the right way. Yes. No, they're both right. It is your personal preference. Some people love one. Some people love the other. Some people love both. The key is that you're consistent in it. And this goes back to rules-based trading, having a trading plan, all the fun stuff we've been hammering you about for the last week or so. The problem isn't using a trend line. The problem is this. The problem is using a trend line the wrong way, or the problem is using a trend line sometimes and not using a trend line the other time. Sorry, I'm trying to get rid of, I got a spammer here on YouTube. Had to get rid of them real quick. Right? Does that make sense? So if you're going to use this method, use it consistently. Don't just use it now and then never use it again. Make it a consistent part of your analysis. So Cody's going down to the hourly time frame. Again, we're looking at the short opportunity right now. He's looking for this trend line. I probably have it drawn on poorly because I'm not a trend line person, but you guys should get the point, right? You should get the point, hopefully. So what Cody's looking for is a few things here, right? So just like I'm looking for confirmation, we're going to erase our VS1s for a little bit. Just like how I'm looking for confirmation of the break of these highs, Cody's not just selling right now. He knows this pattern. He knows that this pattern in its own right probably isn't enough. You're looking at, real quick, Cody, you're looking at this trend line or a smaller one from up here? Just so I have it drawn the correct way. You got it? Okay, perfect. Yeah. So he's not just saying, okay, I'm going to sell right now. He's looking for confirmation. And for him, confirmation is going to be a violation of this trend line, right? If we're going to continue to see these series of higher lows, we should respect this trend line level of support. If we violate it, and in this particular case, I guess it depends on how long it takes, we would have a double violation, right? We'd have a double violation of our horizontal support and our trend line support, which would be a nice little shift. You can add the 162 even handle in there as well, right? Once we have a violation of that level, well, that's a sign that says, hey, this thing has changed. My perspective as the market has changed. And he's looking at the different ways to take it. You can trade a breakout of it. You can trade a breakout in a retest, and then looking for some relief to the downside. I think you said 161. So this level of structure right here. Does that make sense, guys? Or she says they're a bearish bat. There's one on the higher time frame. This looked like one right here. It was violated, but probably not stopped out right here. That just formed. But there's one on the higher time frames. I know that. Well, it's a Gartley. I'm not sure which one you're referring to. All right. All right. So that's a short opportunity right there. Thank you for sharing, as always, Cody. I think it's awesome that our traders can get different perspectives from different traders, right? Again, what we're trying to ingrain in your head, right, is not, there's no one way to trade. There are multiple ways to trade. Now, there's a certain way you have to do things, but it's okay to have different perspectives. Like this is not a place where we want you having a different idea and then feeling that you're wrong and losing confidence, because you're not. The point is you're going about it the right way. So if I were to ask Cody, and I know Cody's a seasoned vet, we've known Cody for a while. Cody's a professional trader. But if I were to ask Cody and I'd be like, well, Cody, why are you looking to get short? And he was like, I just kind of feel it. Is that a professional way to answer it? I kind of feel like it might go short from here. Like, no, then we'd have to call him out. But in Cody's explanation, he wrote exactly what he needed. He said, hey, price action is trading at a previous level of structure support or structure resistance with an even handled number, helping that out. We got triple tops. If we can violate that upward trend line starting at the bottom, then I'll look for shorts down to 161s. Boom. Boyd, don't spoil it for me, Boyd. That's what I'm looking at next. Don't spoil it for me. I got to look smart. I got to look like I'm the only one that can see this stuff, Boyd. Boyd's typing in bearish Gartley if we break this upside. Come on, man. Stealing my thunder. First, James answering his own question, leaving me and Charles out there dangling. Now Boyd doing analysis for me. Man. So that's an opportunity there to the short side. And if you have any questions, let me know. We can revisit that. I'm going to go back to the 4-hour chart. I got to get this idea in before Boyd types anymore. Well done, sir, by the way. So let's kind of erase this. We'll draw some of it back on. But we got another thing setting up here, right? We have a potential advanced pattern formation. Remember, advanced pattern formation are harmonic Fibonacci ratio based patterns. They come from a series of ebbs and flows in the market, typically when the market is consolidation. So like brief retracements and failed extensions. And again, if we go back out to the daily, back to day one stuff, are we bullish? Are we bearish? Or are we in consolidation? You can probably see one to the downside as well. Even handle numbers, still confused. Okay, so we call it an even handle number, and you can call it a psychological number. Numbers that end in 0, 0 and 5, 0 are going to be your most important ones. Mainly 0, 0s. I don't really pay too much attention to 5, 0s, but those would be secondary. That's what we mean when we say even handle numbers. So if we're looking at kind of our price guide over here on the right hand side, you can see 160 even, right? 161 even, 162 even. These are what we mean by even handle numbers, or even when we say even handles. Again, it's a different terminology for different people. But let me know if that makes sense. Yep. And again, you can look at 5 zeros if you want as well. But yeah, even handle numbers, psychological numbers. Again, if you think about the market and the price chart is really nothing more than a visual representation of all of the market's participants and the actions in which they are taking, right? So it is us, human beings. And you can say robots, but robots are programmed by human beings. For now, that's a rant we won't go on today because we don't have enough time, but we're getting closer and closer to that tipping point of the robot apocalypse. But you think about human beings, you think about crowd psychology. The more you understand crowd psychology, the more you can understand why and how the market moves, because it moves off of fear and greed. Oh, don't get me started, Charles. I just read this article about the Google employee that was fired because the ethics. I think he worked for the ethics department. He was in charge in making sure this robot made ethical decisions, and the robot didn't, and they fired the employee instead. Yeah. Oh, don't get me started on the straightforward answers the robot was giving as well, especially when they asked him what is the biggest threat to mankind, and he looked him in the eye and said, "Me." But nothing I can do about it, so we'll just let that happen. I'll be on a Tesla flight somewhere to one of those new galaxies we found. we're on the first jet out, the first spaceship out of this thing. But yeah, so even handle numbers. You think about humans and crowd psychology, right? What numbers are we most comfortable with? 0 zeros, right? Dividing and multiplying by 10. So these are very comfortable numbers for us. So we make a lot of crucial decisions around these numbers because they sound good. If you just watch CNBC, and they'll say stuff all the time. Oh, pound yen, watch out for the 169 level. They never say look out for 169.23. It's always 169, right? So these tend to act like critical levels of support and resistance in the markets. That's why we pay attention to them. But we're in consolidation, so we should be expecting, or we should be on alert for a potential advanced pattern formation. And if we go down to a lower time frame, we're going to see one. And we'll draw this out kind of one by one. So we start off with this first move here. And this is going to be our impulse leg. So up here is going to be our starting point. This is going to be the end of our first leg. So our first leg is going to start with what we call an X, right? Don't worry about why it's an X. It's just X, the starting point, right? X marks the spot. To A. So the end of our first leg down here is going to be our A. This is going to be our X to A leg. This is the starting point of any advanced pattern starts with an X to A leg. We then want to take a Fibonacci retracement out. And again, this is why it's important to understand how to read a price chart, right? We were talking about this the other day where traders want to rush into trading advanced pattern formations, but didn't know the basics of how to read a price chart. Let me ask you this. If an advanced pattern formation, harmonic pattern, ratio pattern, whatever you want to call them, right? If they require a certain series of Fibonacci retracements and or extensions hit in a certain order, that means that in order to measure them, aside from using the cool tool that we gave you, which automates it, that defeats the purpose of this, Darren. Made it too easy for him. But anyway, it requires. It requires. I'm waiting for people to type in "will kill." It actually doesn't require. You see this little thing up here, Enigma. I just click the button and it shows me the pattern. So take that. I'm like, okay, well, you're right. We're right. We're contributing to the robot apocalypse as well. But Enigma aside, because I do think you need to train your eyes to do this manually and then use the software that we gave you guys as a support. But we need to draw on Fibonacci's. Now, can I draw on a Fibonacci if I can't identify what leg to draw it on first? Yes or no? Right? Do you see how it's baby steps? If we can't draw this X to A, if we can't identify this X to A, I have no idea where to draw this Fibonacci from. And if I can't draw it correctly, I'm going to get incorrect ratios. If I get incorrect ratios, I'm going to draw incorrect patterns. And it's funny, we see this all the time because you see people on the internet that rush in to try to do this thing. And they'll be like, hey, Keo, I got a Gartley. And they'll show me a picture. And I'll be like, what the hell is that? And I'm like, no wonder you're failing, because you think you're trading something, but you're not doing it right. And that's a bad position to be in, because you're confident in what you're doing. You don't know that you're doing it wrong. And it ends bad. So we want to draw that Fibonacci on, right? We want to see what our first retracement comes to. In this circumstance, our retracement comes to our 618. So because we come to a 618, I know that I'm going to alert for a Gartley pattern. I then want to draw on another Fibonacci from my A leg. Sorry, I should have labeled this. This is my A to B leg right here. I then want to draw on another Fibonacci, this time from my A leg to my B leg. So the second leg that I just drew on. And I want to look for another retracement, right? You can see this one barely gets there, but we do get to our 618 Fibonacci retracement once again, which confirms the next leg of my Gartley pattern, which is the C leg. So now the question I'm going to ask myself is, where is this Gartley likely to complete at? I'm going to kind of sneak forward and draw this on so I don't have to connect the dots. So give me a second real quick. X to A to B, B to C, get down there. I know that my Gartley pattern is going to complete right up here at 165.17. So 165.17 is the decompletion, or what we call a decompletion. And the zone goes from that D completion all the way to the top of the X leg. So if I am a Gartley trader, this is where I'm looking to sell. This would be a sell pattern. I'm either selling aggressively at the decompletion with a sell limit order, or if price action reaches our kill zone, or a kill zone, as they say on the internet, then I'm looking for X, Y, and Z, right? Whatever my entry reason is to take it short. Now, this is interesting, right? Because this can work into our initial analysis as well. If you remember initially, right, we looked at this formation right here. We said, hey, we're kind of in a holding pattern. We're going to do one thing or another. We're either going to break to the downside, violate Cody's trend line and get short, making Cody lots of money, or we're going to break out to the upside, which would probably also make Cody lots of money because I'm sure he's waiting for that as well. So let's say we get an opportunity to trade it to the upside after a break of, what are we at, 164s. Where do you think a good place to trade it to the upside to would be? What would be a good target level? Well, initially, you may say all the way to previous structure highs to the X leg. You can certainly do that. If you remember, we did identify this elephant candle right here earlier on. So you could look at this level as well. And if you're someone that trades the Gartley or at least respects advanced pattern formations, maybe the fact that we have a decompletion right up here causes you to take a more conservative target. And instead of shooting all the way up here, you say, you know what? I'm just interested in getting out right here before we run into trouble. 165 even, right below, even handled number, right at our inside level of support here, or our minor level of structure, and before the decompletion. Do you guys see how one can help the other? It's all analysis. Then the only question that remains is, what are you going to do with this analysis? Are you going to be someone that trades it up? Are you going to be someone that waits for the move up, waits for the Gartley, and trades it down? Are you going to be fancy and do both? Are you going to trade it up, immediately stop and reverse, and then trade it back down? Those are fun. Very scary. Has anyone taken a stop and reverse before? I'll tell you what, when one hits, you feel like a boss. Darren says it. Darren, don't you feel amazing when it hits? If you don't know what a stop and reverse is, let me know and I'll explain it. But man, there's probably no better feeling in trading. Yeah, I would say that. There is no better feeling in trading. Not that we're supposed to have feelings, but we do after they're over. There's no better feeling in trading than hitting on a stop and reverse. Now, it is the scariest thing you can do. It is like playing a game of chicken. It is like driving your car full speed to the edge of that cliff, hitting the handbrake, right? Pulling the handbrake, whipping a U-turn, drifting right to the edge, right? Maybe the back wheel skids off a little bit, and then boom, going full speed in the opposite direction while the police that are chasing you fall off the cliff, like in those old cartoons. That's exact that. If you can visualize a stop and reverse, that's what it is. There's no better feeling when it works. Now, when it doesn't work, you fall off the cliff. But of course, it's not as drastic as in real life where you would die. You would just, you just get stopped out of a trade or something like that. But it's a cool opportunity. So the point is, right, what I see with a lot of newer traders is that, and you guys can let me know if I'm right or wrong with this. You go into a market and you think there's such thing as bullish analysis and bearish analysis. Have you guys ever thought that, or do you think that? Like I'm analyzing as a buyer or I'm analyzing as a seller? I used to think that. The truth is, and going back to the IPDE process, right? There's no such thing as bullish or bearish analysis. There is just analysis. The question that you have to answer, and this will be answered when you develop a strategy and you have a trading plan, is how are you going to use that analysis? Does that make sense? Give me a yes if that makes sense. Give me a no if it doesn't. Okay. Like a hammer is a hammer, no matter what. That is your tool. How you use that hammer, you can bang a nail in, you can take a nail out, right? Same tool. The difference becomes in how you want to use it. And what you guys will learn later is that one of the methods that we use for target taking is called think like the other trader. And think like the other trader is just a fancy way of saying you want to get out at the spot where you think, right, the move you're expecting will end, right? Target taking is a massive problem for a lot of traders. A massive problem. Believe it or not, but traders generally aren't too bad with making predictions and getting involved in trade. Now, there's a hit and miss in there, obviously. The biggest problem I see is, aside from the psychological stuff, is target taking. They either get out too soon, they don't get enough bang for their buck off of the trade, or they get out too late. They overshoot the trade and price moves in their direction, but they never get out because they were looking for too much. So the ability to think like the other trader, what you want to do is you want to get out. If you're a buyer, for example, you want to get out at the location in which you think the sellers are interested, because that's where the selling pressure is going to be, correct? And selling pressure, right, the shift from buying pressure to selling pressure is what's going to reverse the market. So even if you are a quote unquote buyer, if you're a buyer every single time, your trading plan says, all I do is buy, I never sell, I always buy, right? Don't you think it's important to be able to read the market and understand where the sellers would be interested in? Because if you can identify a level where you know the sellers will be interested, and you know that selling pressure is going to reverse the market, that is probably a good place to get out, right? To take your targets and run. Is it not? So important. So important. Underrated. Underrated. All right, so we got 3 ideas here on pound yen. We got the trend line short down on the hourly. We got the breakout long on the 4-hour and hourly as well. We got the bear Gartley here on the 4-hour. Any questions about the pound yen? We're almost an hour in already, so we'll probably take our first break. So if we get into another pair, it's going to be another 30 minutes. But any questions I can answer for you on this particular setup, any one of them, or anything that we spoke about before we gear up for our break, give you guys a little bit of a rest before coming back. Again, not a very active market, but there are a few things. There's patterns all over the place. You know, dollar Swiss has a pattern as well. Think of bull Gartley. Pound dollar, we looked at that already. Darren chimes in. Darren says, I think that's a good way of looking at it. Your job is just to perform analysis, not necessarily bullish or bearish analysis, but as an independent observer. And then based on what you find, you make decisions with that information. Yeah. I always say, Darren, because I have experience, and you do too, but I started off as an investor. And typically as an investor, you're always buying, right? Typically as an investor, you're always buying. So I always had this bias of like, I didn't know any better. You just buy, you wait for things to get short or sell to a cheap price, and then you buy. And in investing, you always took a personal stake in the company, right? So, here we've been teaching you guys about technical analysis, right? We use technical analysis first. You can sprinkle fundamental analysis second if you want to. For me, investing was a different story, right? It was all fundamental analysis first and then technical second. So I had to have a fundamental reason to invest in the company. And then I would use the technicals to kind of pinpoint, where I'm interested to get involved at. I do that to this day, where, we have fundamental views of something, and then we wait until certain levels are hit, key levels where we think we're going to get the cheapest price, and then we load up at the cheap price and hopefully watch it rally. Trading, we're more like a mercenary, right? I come into the market as a trader. I don't care if the dollar's strong. I don't care if the dollar's weak. I don't care if the pound yen is in a bullish trend or a bearish trend. I do not care. All I care about is looking for opportunities for me. So selfish, right? That is all I care about. If we're going to go up, how can I get involved in the up move? If my analysis says we're likely to go down, how can I get involved in a downward move? That is all I care about. And I love the way you put it, Darren. Independent observer. Like we are independent auditors. We have no stake in this game. We don't care whether this company fails or it succeeds. We're just here to look at the data in front of us and make the decision based on what that data tells us. No emotional feelings at all towards it. That is a great way of putting it. Darren says, but if you go into analysis already thinking I'm a bullish trader, then you're naturally going to find bullish opportunities. And that's that, if you guys remember, that's the confirmation bias we spoke about before. I suffered from this greatly in the beginning of my trading. I suffered for this greatly at the beginning of my trading. Darren said, I noticed that too when I started going into equities after spending most of my time in the Forex market. In Forex, I was just analyzing. In equities, I found myself trying to convince myself for a bullish outlook. Yeah. And what I did beginning of my trading career, and this is the part of being alone, which sucks, right? Because not a lot of people trade. Usually, I would say 9 out of 10 people in here are probably alone. Would I be correct in saying that? That 9 out of 10 of you guys don't know anyone, like a close friend that actually you can talk to about trading, right? You're alone. So what do we turn to, right? We turn to one or two things, right? We turn on the TV or the internet and we start watching Bloomberg, Reuters, right? CNBC, whatever it may be. We want to be kind of in the trading mix, feel like traders, or we go to trade forums or whatever on social media, WhatsApp or something like that, right? And in either of those places, we hear a lot of junk because people like to talk, right? On TV, it's a business. It's a business. They have to talk, right? They're selling an entertainment service. They have to talk. Funny story. I don't know if I told you this, Darren. So I got invited to go to, I still feel like this was a mistake, but I stick to my principles. I got invited to go on Real Vision. I don't know if you guys are familiar with Real Vision. I got invited to go on Real Vision and do analysis. And I had to tell them no last minute because there was nothing of interest. Like there was nothing of interest in the market. And I refused to go on there and just like talk for the heck of it. Like, because it would be very boring, right? I had to pick a specific pair. I can only stick to that pair and all this fun stuff. And if I would have went on there, I would have been like this. Hey, Akil, what do you think about the dollar Canada? I got nothing. Back to you, Jim. Right? So like, but that's why I say I would never be on TV because it would be the most awkward. Like, hey, we gotta fill another 30 seconds here. Yeah. What do you think about a bullish opportunity? Nah, probably not. What do you think about a bearish? Well, if we're not bullish, we have to be bearish, right? And then we just have that weird, awkward look. I don't know what to do with my hands, so I'm just like twiddling them in my pockets. Do that little heel toe dance where you lean back and forth, right? We've all been there, right? And Billy says, I can explain why there's nothing, but that doesn't sell on TV, right? CNBC's job isn't to tell you why there's nothing. It is to tell you what to do. People don't chime in to hear that there's nothing in the market. People want to hear gold is on fire, oil, bullish. That's what people want to hear. It is an entertainment business. It's not real trading. Like that's what they want to hear. Why do you think Jim Cramer is so popular? Bells and whistles and noises and stuff popping up, right? People like that type of stuff. People like that type of stuff. Yeah. Put in the word crisis or crash. Oh, now you got me going. they'll be in my earpiece. Just say crash. Just say there's a crash, man. Just say there's a crash. Like we'll make up a reason for it later. Just say it. Just say it. I'm like, no, I'm not going to say there's a crash. Ah, you said it. Gotcha. But when you spend time listening to this stuff and you listen to forums, you get this confirmation bias. If enough people are saying, man, we should buy the euro dollar. Yeah, we should buy the euro dollar. Hey, did you hear, guy? Got to buy the euro dollar. Hey, CPI coming out tomorrow. Got to buy the euro dollar. Right? We start hearing this stuff enough. What starts going into our head? We start thinking to ourselves, man, I got to buy the euro dollar. And we don't even notice that coming into our head. But then we take that to the charts, like Darren said. We take it to the charts, and then we're only looking for reasons to buy. We're ignoring everything that says sell because we only want to buy, and we're blinded. And that is a massive problem. That is a massive problem. And you get the same thing in chats and whatnot too. Yeah, so we got to get rid of that confirmation bias. We have to be independent observers. That means don't care what I say, don't care what Darren says, what Charles says, don't care about the TV says. Base it off of our analysis. And that's why it's so critical that we do analysis the same way, right? You remember the formula. Consistent analysis plus consistent execution equals consistent results. If you're consistent in analysis, you will look at things the same way. You look for the same things every single time. You're uncompromised. That CTS system we talked about, right? You're going through your checks. 1, 2, 3, 4, 5. You're uncompromised. If then, you're uncompromised. That's why it's so important. We need to bring that consistency. Now, real quick, got a question before we take our break here. And we're actually going to take it this time. I know I say it all the time, and it's like 10 minutes later. The completion D point for a bat pattern still confuses me. Sure. What confuses you about it? I can tell you why it confuses you, right? Because you don't know the rules for it. But is there something else that confuses you about it? It's not confused if you don't know the rules. It just means you don't know, right? So I don't look at that and confused as the same thing. There's a difference if you just don't know. But if there's something that confuses you, let me know. For you guys watching on YouTube, again, we streamed the first pair of the day. We only looked at pair so far. Do me a favor, hit that like button before we get you out of here. Show me some love. But let me see what the confusion is. Got a few seconds. If not, we're going to take a break and we can talk about it on the other side. But let me know what's confusing. Is there something confusing about it, or is it that you just don't know the rules? The ending that you gotta give. What about the ending point? Why is it there? Like, why is it at this specific location? Yep, because those are the rules of the pattern. So each advanced pattern formation has its rules on where the decompletion is. So if you're looking at a bat, the decompletion is always going to be at this one place. If you're looking at a Gartley, it's always going to be at another place. If you're looking at a cipher, it's always going to be at this place. If you're looking at a shark, a crab, or a butterfly, it's always going to be at this place. So there are rules on where that decompletion is. So it's not just a random level right here. It's a rules-based reason, right? For the Gartley here, it's a 127 extension. So wherever that 127 extension is, that's where the decompletion is. So hopefully that clears it up. But let's take a break. We're an hour in already, 59 minutes in. We're going to put 13 minutes on the clock. If you guys have pairs you want me to take a look at, any questions about anything, let me know. Again, I got a short list today that we can probably go down to and find some day trading opportunities to talk about. But I'd much rather talk about what you guys want to talk about, because this is meant to be kind of a training session to support what you guys are learning throughout the workshop. So I'll see you guys in a little bit. Yeah, we'll get back to business.